Today I'm going to be telling you the truth about the 2021 housing market crash. Is the market actually going to crash? When will it crash? By how much? How much will the US election affect the US market? And how much would a no deal Brexit affect the UK market? So it's no secret that the number of daily pandemic cases is back on the rise. In the UK, cases peaked around April-May time at around 6,000 cases a day. It then fell to lows of only around 350 cases a day, but has since blown well past those highs up to around 26,000 cases a day. Now, a large reason as to why these cases have increased so massively is due to the improvement in technology around the testing. It's now a lot easier to get a test than it was back in April-May time, and therefore a lot more data is being collected. Looking at the number of daily deaths though, the same story just isn't being told. Deaths peaked around the same time, up to 1,200 deaths per day. It then fell down to lows of around 2 deaths per day and sometimes even 0 deaths per day. It's now increased back up to around 370 deaths per day, but it just doesn't mirror the same as the daily cases. Deaths obviously have increased, but haven't blown past their earlier highs. Now, there is some discussion and disagreement about the accuracy and the reliability of these daily cases and death figures, because obviously deaths are counted for whatever reason of someone dying within 28 days of testing positive for the virus. But I think it is fair to assume that cases and deaths have risen from those lows around August. Over in the US, it's a very similar story. Daily cases have fallen from around 36,000 down to lows of 17,000 a day, and then blew past those lows and those earlier highs all the way up to around 91,000 cases a day. However, deaths have still decreased from around 2,800 deaths per day to only around 1,000 deaths per day. So we're just not seeing that similar increase and blowing past those previous highs in the number of deaths, probably because the testing for the virus has improved and therefore more data is being collected. Most of Europe has already entered a second lockdown, the UK has just announced a second lockdown, and the US has announced that even though Q3 economic recovery blew past expectations, there's still quite a long way to go. So what issues is this lack of economic recovery and second lockdowns going to cause? Well, firstly, it's going to cause a loss in confidence in the housing market. After the first lockdown and the housing market freeze, people regained the confidence to go out and list their property for sale and buy somewhere new, because everyone thought that we were through the worst of it and that it wasn't going to continue for much longer. However, with new lockdown measures coming into play and the lack of an announcement of a second stimulus check or increased furlough pay, that confidence is going to fall. People are going to start to worry whether they made the right decision to upsize their property, and they might even halt their search for a new property if they're still searching. A loss of confidence can be really damaging for the housing market. People won't be going out there and making investments and buying somewhere new, and therefore the market will kind of stagnate as demand for properties will fall. More and more people will be getting worried about their current home and will think about listing their home for sale and either downsizing or moving into rented accommodation to try and protect that equity that they've built. This is going to mean that more and more homes end up on the market, but with no one really to buy them, other than investors looking for a sneaky deal, of course. This is going to mean that homes stay on the market for longer, as there's not really going to be anyone out there to buy them, and there's probably not going to be as many bidding wars on these properties. People will be struggling to sell their properties for below list value, rather than selling their property for over list value easily. We're also starting to edge our way into the winter months. House sales tend to boom in the summer months and then fall in the winter months. Because of this loss in confidence, I expect house sales in the winter months to be really low. They might then start to pick back up in the spring and summer months next year, but they might not, and I'll cover that in a little bit. Now, it's no secret that I believe very heavily in supply and demand. I think it almost entirely controls the housing market. There are some other things like interest rates and inflation and taxes, but in a way that also kind of impacts the demand in the housing market. In terms of demand, October's now over and the UK government haven't announced any extension to furlough pay. They have announced a new job support scheme, but that's only going to cover up to 60 to 70% of employees' wages, and therefore people's income is going to fall again. The UK has also just announced a second lockdown, which is planned to last at least a month. Although it's probable that it could last a lot longer than a month, as the UK have introduced this new job support scheme and business rate schemes as well. Therefore it seems like they're preparing for a much longer lockdown, and therefore people aren't going to be at work earning their salary. Now, while this does mean that people will have some money and will have an income, they're obviously not going to have as much as they used to. That means they might need to cut down significantly on their spending, and they might even lose their homes if they can't keep up with their mortgage repayments. Most people out there live paycheck to paycheck, and most people don't save between 20 and 40% of their monthly salary. Therefore, it's going to be these people that are going to have to either cut back massively on their savings or might end up losing their home. On the positive side, the government are still going to be supporting salaries, and therefore most people will be able to cut their spending and will be able to keep their home as they can still afford their mortgage repayments, as they are getting some money, not just a flat zero. Over in the US, that rate of unemployment is continuing to fall. This is a good thing, because more and more people are becoming employed. In September, unemployment was around 7.9%, and this is expected to fall to somewhere around 7 to 7.6% for October. Now, this is obviously a very good unemployment rate compared to April, where unemployment rates were around 15%. Obviously, it's much higher than the unemployment rate in 2019, which is only around 3.5%. If you're enjoying the video so far, be sure to smash the like button down below, as this really helps out my channel with the YouTube algorithm and allows me to create more videos just like these for you guys. Now, something else that I also think very heavily impacts the demand in the housing market is the availability of credit. It's great if you've got a salary to pay for those mortgage payments, and it's great if you've got that deposit saved as well. But it's obviously not great if you can't get a mortgage, or if you need an absolutely giant deposit that you just don't have. This article suggests that the availability of mortgages has fallen to a 10-year low, as around 150 mortgage products have been pulled from the shelves. Lenders have been tightening the lending criteria, requiring you to have a bigger deposit. This is obviously a real problem, as it means that homes are a lot more difficult to buy. Even if you have kept your job and you've managed to save a 5 or a 10% deposit, it's just not going to be enough, and you might need around a 25% or a 30% deposit, which is similar to commercial mortgages, which just isn't attainable for that young first-time buyer. I think it's also really important to remember that the other measures that have been put in place won't last forever. Mortgage forbearance over in the US and in the UK isn't going to last forever, and neither are the current UK stamp duty cuts. Therefore, obviously, if the number of housing sales does start to recover in the spring and summer months, it's going to have to do this recovery without that aid of mortgage forbearance and the stamp duty cuts, kind of propelling it along a little bit more. Any remaining furlough pay or job support scheme over in the UK is going to have expired as well, and even if the US do receive a second stimulus check, it's unlikely that they'd receive a third. This means that those measures that are in place at the moment that are like artificially propping up the housing market won't be in play any longer. And obviously, if the virus is still around and all people aren't back to work and are currently unemployed, well, there could be a really big problem. People will lose their jobs if there's no furlough pay to support them, and businesses will go under. People therefore won't have a salary, and if they don't receive any additional stimulus payments, then they won't really have any money, and therefore obviously aren't going to be able to afford their mortgage repayments, especially as the mortgage forbearance won't be there anymore either, so they'll have to make those payments. If people can't afford their mortgage repayments, then they're going to lose their homes, and when one domino falls, all of them fall. People are going to be losing jobs left, right and centre, and are therefore going to be losing their homes left, right and centre, and thousands if not millions of homes are going to flood onto the market in the UK and the US and everywhere else around the world, and the market's likely going to crash. Anyone that doesn't lose their homes might start to panic about the falling house prices. They might then decide to list their property for sale and downsize, and that's obviously going to only add to the problem and increase the impact of a housing market crash. If you've made it this far into the video, then be sure to subscribe if you haven't already. Only around 3% of you are actually subscribed to the channel, which is really low. So subscribe. It's free and you can always unsubscribe later if you want. I think we could see price crashes of anywhere between 5 and 10% on the low side, and between 30 and 40% in the high side in certain places of the UK and certain places in the US. I also think a No Deal Brexit would also have a massive impact on house prices in the UK. Brexit already had a pretty big impact in house prices between 2016, 2017, 18 and 19, as house prices pretty much stagnated this entire time. A no deal Brexit would mean that foreign investment received would fall, and therefore demand for properties, especially in central London, would also fall, as obviously properties aren't going to be sold to wealthy people overseas. Although on the flip side, it's likely that the government would reduce the amount of the budget that's allocated to housing development, as they'd have to reallocate it to other departments and focus on building new trade deals and also supporting the expenditure in other departments such as healthcare and other sectors. This would obviously mean that the supply of new homes onto the market would fall, and therefore the supply would reduce, and therefore it kind of balance the supply and demand equation. Although it's likely that any negative impact had by No Deal Brexit would probably outweigh any positive impact, and therefore overall a No Deal Brexit would probably be even worse for the housing market. But what about the US election? How would that affect house prices over in the US? Well, historically, house prices appreciate less the year after an election because of a fall in confidence. Maybe there's a new leadership, or maybe people weren't overly happy about the continuation of a current leadership, and therefore obviously the confidence fell. People obviously don't know how the country would react to a new president. Would they be good? Or maybe not? And therefore people tend to hesitate when buying a new property and might end up delaying it for another year or so. Taxes might change under a new presidency, for example. They might change for the better, or for the worse. It might impact property taxes directly, or might impact income tax, which obviously flows on through and impacts the housing market. Although typically, the election doesn't significantly impact house prices. It tends just to affect the volume of house sales before and after the election for a few months either side. All in all, it seems like we could be in for a pretty rough 2021. As obviously COVID's going to last at least for a few more months, and the world seems to be going back into a second lockdown. Furlough is obviously being replaced by the job support scheme, which is obviously supporting less wages, meaning that people could end up losing their homes as they might not be able to afford their mortgage. Mortgage forbearance is obviously likely to come to an end in a few months' time, and obviously if the unemployment rate stays high, then people aren't going to be able to afford their mortgage payments when they have to make them, and are therefore likely to default on their mortgage and potentially lose their homes. As always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!